Alrighty, cool. So I still got the screen. All right. So what I was seeing in alignment with what you had just explained was you have this lower or higher low rather. We were coming from over here, just kind of following it down, lower high to I think lower low there. I think that's a wick to lower high to lower low. And then that previous lower high there had shifted, started moving up, kind of weird structure. And then right here, you have an obvious move up here with a higher high that then takes out the previous structure low right here. See that?
Right.
So when I was saying like everything's kind of structure based and it all kind of plays out in ranges, in this moment right here, really the only thing that matters is this high and this low that was created that broke that structure. And what was left behind at the top, that supply zone with all of the imbalance here that did get filled, but looking for the ideal entry somewhere up at the top, because that's usually how like smart money will work in any market really. So pressing fast forward, it looks like it did mitigate that zone, but then it came back again a little bit further, came back again, I think, to clear those highs, to clear these highs right here with these new candles here, these wicks that came into it. And then another shift right here had occurred with this low that created this high and that big impulse down. So that basically broke the structure here and created a new range to work with. So at the end of the day, this zone really held pretty good and it played out perfectly. And then again, I think it happens here where your indicator actually turns on and identifies the zone for you automatically.
Right.
You can kind of see it there if I get rid of all this noise here. You see how it tapped right into it right there?
Yep.
Yeah, that was it. Because at that point, the same train of thinking I would have where this high created this low. And since it broke previous structure right there, that zone was ideal.
Yep.
For a potential sell right back down. Basically just filling in all of this imbalance here to the left, all that red candle imbalance and hitting your zone and then right down. So that was a nice result.
I mean,
But yeah.
that's a very, very good analogy. I'm glad you drew that out because I kind of forgot about that. And that's why one of the things I do is, like, say for example, let me just grab a remote real quick here.
Yeah.
You know, I would, if this was, if this was current price, let's say I marked up everything and I see price here, then I would definitely look at this as a zone. And so then I would say that I would ask myself, I say, okay, this is the most recent move that caused a lot of the imbalance gap. And then I would ask myself, hey, have they at least mitigated half of this? Which they did. So then I would look and say, you know what, this is probably more likely going to sell again.
Yeah.
Because now they got to mitigate half of this. And so, so that's what I'll be looking for. So then this would be my take profit zone. And I'll probably be looking down here possibly, you know, as well. So, you know, that's one of the ways I kind of look at the chart as well with this imbalance, but I'm glad you brought this out because it's another thing I can add to what I'm currently already doing.
Right.
And as we can see, it came back down and then, you know, coming back and look what they did. It broke this structure. So now you know, like you said, horizontal line here. So now you know that this is going to be a legit zone here. So you could, if you're experienced, you could say, well, I could probably get a short buy here. Get something decent, because they're probably going to try to fill half of this or maybe mitigate up to the zone. Let's see if that happens.
Yeah.
But they decided to go the other way. which is understandable because they came and mitigate this area. So they're probably going to create a lot of cells and then eventually come back up to here. So I'm gonna play it out and see what they do. I can understand why they sold it down a year ago. At the same time, that's the best part. Because they didn't come back and medicate half of this here, so they decided to push it down. So that makes sense. But I would know eventually they would come up to this. But let's see. Yeah, see that?
Can you pause it for a second? Can you pause it? Can you stop it? So it looked like it, since it went back up, these stop hunts. Hold on, let me mark it out real quick. See.
Do you want to take control of the mouse?
No, I was about to annotate. Is that where it was at just now?
Well, I kind of went back a little bit because that's when it started going up. So I can see that that was kind of a good point. But you want me to go back to where it was?
Hold on just a second. Let's see.
Yeah.
All right, go ahead. I think I remember it coming up.
Because it broke previous structure here. Am I correct, Alex? No, Alex is on mute. But yeah, but
Can you play it just for a little bit?
Sure. Yep.
And it should come back down since now these should be stop hunts.
Right.
To neutralize them. At least
Right.
that one. I don't know what time frame is it? 15?
Yeah.
So it shot up past these and neutralized these down here with these wicks. And it should do maybe, no, this one got neutralized right here. It passed this one, so this one should buy up. I could be wrong. And then neutralize this one.
Well, you're not wrong. Eventually it's going to come up to here because they still have this gap to fill here. But I wouldn't be surprised. Let me see something here. I wouldn't be surprised since they mitigated half of here. I wouldn't be surprised if it starts to sell down a little bit down again and then go up. Let's see what it does.
My bad for all the markings. I'm trying to erase it.
No, you're good. Yeah, see, it created another zone and it went down. But what it's probably going to do is, hey Leslie, what it's probably going to do is now it's probably going to come up and get this here, come down again, or it might go all the way up. But see, I'm just playing around a little bit here. Yeah, see, it came back up, medicated half. Yeah, see now it's starting to go up. See that? Which now it's they're saying we're filling the rest of this here. So now looks like it's almost breaking the structure, and if it breaks the structure, then it's probably going to go all the way up here to fill this imbalance, maybe up to the zone. This is just me thinking out loud, understanding the money concepts. I want to see what, yeah, see, I think it's starting to go up a little bit.
Yeah, Paul, that high, that big high was a target, basically where it
Right here?
stopped, right? The previous high. If you go back a little bit, the where that big bullish candle is, that high, a little bit over to the right there. Yeah, that high was a target because structure had kind of shifted. You can see it with the previous lower high. It's kind of where your purple zone is at the bottom there. That lower high, that red wick, a little bit over to the right, a little bit over to the left. It's like a lower high, a little bit higher, a little higher, right there. Yeah, that broke. That whole structural high got taken out with all of that blue imbalance impulse to the top. Yeah. So as it came back down and filled all that, within that blue wick at the very low on the left, the blue wick, it's very obvious, that long wick. Yeah, that was a demand zone that held and just turned price right back up to target the high, because the price structure had already changed bullish in that moment based on this 15-minute time frame. Every time frame has different structure, but like you can see it on this time frame, like just like I showed you the sell and how the sell broke the lows. In this case, the buy broke the previous highs. So that high at the top was a potential target, basically a take profit if you had bought it all the way at the bottom. So everything kind of works in ranges and in impulses as well.
And then what's funny is they brought it back down to this wick,
Right.
which it kind of, I would say, maybe kind of broke structure. This one broke this, well, it's kind of the same with the wick.
Yeah, it just literally went to the extreme point of mitigation and then bought right up.
Yeah.
So it was still valid for
Right,
the bullish side,
right.
unless it broke the wick, then it wouldn't be.
And once again, it made this a target again, because look what it did here.
Right.
So now when we analyze this, let me just erase all of this here. And so now when we analyze what current price is now, and Chris is coming in, but then we're recording this, because I'm going to study this a lot. What's going on, Chris? So now when we look at here, price broke this structure, and it knocked out this previous high. So now it probably makes sense that price would probably dip a little bit more. Let's maybe make it half of this. Well,
It may not come, but these right here are not neutralized yet. But you may not see
Right.
that till later on.
right.
And then it pushed up past these as well. So then, well, that came back. So I don't know if that neutralized it or not. It probably won't come down this far, but
Yeah, it might come down halfway here, and then they might, because still have to neutralize all this up here. But this is probably the closest they probably might want to neutralize first. So if I were to trade this, I would say this would probably be a decent target that price would eventually come back to. But if I'm looking at the most recent move, I probably would look at this as the eventual target, but I know they will probably attack this one by one. So let's see what it does. I'm gonna play it. Yeah, it's grabbing all that liquidity up here. And liquidity. Let's see something here. Yeah, you have a red order block up here. There's a bounce and again that liquidity up here. So let's see. Yeah, see, it's grabbing that liquidity. And
Yeah.
see, it came down at least down to here.
Yeah.
Probably
That's a
mitigating
stop
all
hunt.
that. Yeah, stop
That bit-
hunt.
Mhm.
And then, yeah, so they're probably thinking, okay, you know what? We're gonna at least mitigate all of this here. And then now that we're close to mitigating all this area, we're just gonna pump it up and hit up to here probably.
Mhm. And basically, Paul, if you see that wick, that stop hunted, that most recent, yeah, once that low breaks, you'll be bearish. And I mean, when it breaks, it's got to break with a body, not just a wick, because a wick is basically kind of a stop hunt if it's not breaking impulsively.
Correct.
So
Correct. It's a
you
huge
pretty
sign
much
that
need
it's
to
going the
stay
other way.
right. No, you still need to pretty much stay bullish in this market until you start to see that shift occur. You
Right.
can anticipate that zone that it's heading to right now will turn price around, but you don't really know for sure until that low breaks.
Let's see.
Exactly, because it's all within a range right now. That low is the protected low, and whatever high it's creating is whatever high it might eventually run once it fills the imbalance and goes back down towards that wick. Unless it just breaks and shifts completely, then you're bearish.
Makes sense. So now we're gonna play this. So it's going up here, getting that liquidity. Yep. Now it's coming down.
And then that high gets targeted almost. Looks like it's going to run the high. Yep,
Yep.
runs the high. So
Yep.
still bullish.
Which
Now,
I figured. Yep.
yeah.
Because up here, and you got this up here. It's another imbalance area here.
Mhm.
I'm gonna keep playing and then whatever, and you can jump in, Alex.
Just real quick, now that
Go ahead.
low, sorry, now that low, that low right there is now the low you want to see break. So you can basically move your call out to that low. You can move your white line right up to that low. Yeah. And you can move that white line. Like that is where you'll basically shift from bullish to bearish, because that was the most recent low that created the new highs that you're in now.
Back down in here. Let's see if it breaks it.
Mhm.
Okay, so now it's down here. So then at that point, if I wanted to sell, risk to reward tool, wait for a break and retest here, then it's probably going to come back down to maybe, I would say maybe down to this zone here. Maybe like a take profit here. If it breaks this, I just want to see.
Yeah. And technically it's still within that bullish range. So it may not, that's just wicking. So that's not valid.
Right.
But it might still run the highs if it doesn't break. If it fails to break, it's probably going to keep going to those previous highs at the top.
Right.
Now, there we go. Now there's a break. Well, it's a wick still, it
It's a
looks
wick.
like.
Yeah, so we'll see if it breaks it. Let me pull this down here.
Mhm.
So then if I were to try to go in for a sell to even get down here, I wait for that break and retest and then jump in. Let's see if it does it.
Right.
Not yet. Now it did.
Oh,
Well,
yeah. Yeah. Technically that broke with a body. So if you pause it real quick, it looks like it already gave you your retest. It pushed down right there with the body, and then it came back up for a retest.
right. So I mean,
So it could sell off here, but
yeah.
just got to see what this one does.
So then probably what I would have did in this situation, and me and Anthony kind of talked about this yesterday. If I would have saw this,
Mhm.
I probably would have went ahead and sold, but I probably would have waited for the next candle to break, to close below that.
You see that top blue, sorry, Paul, I didn't mean to cut you off. Yeah, go down one more to the next high. That blue candle up there. Yeah, that whole blue candle is a supply zone at this point.
Right.
It would be safe to sell it there, if anything, because the breakout might fake you out again. Just from what I've seen, like it might just come right back up and you get in the sell and then immediately price is already going against you. But that zone at the top, that last blue candle, it's unmitigated, meaning there's nothing like tapping into it on the way down. It's basically got imbalance right below it. And the candle itself has never been wicked. So it's a fresh, unmitigated zone that you could use to get the sell at a better price rather than the breakout sell.
Makes sense. Okay.
Just a little tip, but we still got to see if it's even going to run lower, because this could still be fake.
Yeah. So let me see if it does.
Right in there where you would sell, basically. Target the lows. Yeah, so it did come back down.
There's small bearish imbalances.
Mhm. It's kind of choppy though.
Yeah, it's raining.
They're entering orders right there.
Yeah, that's what they're doing. Yeah.
At that point, for me personally, well, it's going back up now. I'd have been looking at the lower low before it shot up like that.
Mhm.
Yeah. At that point, I wouldn't even have went for the sell, because then at that point, you know, I would be looking at the previous high here.
Mhm.
Then if it broke that, and I
Mhm.
say that's a valid sell, which is when it went to the next zone up here. And so now they ended up mitigating all of that up here that I drew earlier, which is right here. That's what they're doing now. So then Put this here.
And basically that zone I told you about, Paul, that blue candle, that little bit further, but yeah, that one, that whole candle as a zone, it did actually sell off. So sells there were valid. Price did fall a little bit lower
Right.
On that next move down, but it didn't quite continue down. So there was profit to be made in that sell,
Correct.
basically. It just wasn't like going to deliver further than we anticipated.
Correct. That's what I figured. So then
Mhm.
at that point, I wouldn't have sold. And then I would be looking at this and say, okay, well, then I'm looking to see if it's going to break this previous high
Mhm.
based on all this mitigation here. So then I probably would have did my risk reward tool here and see if, hey, where's it going to go? And look what it did. Now let's take profit and went all the way up here. So we got a profit there. So I can see what Alex is talking about. And so then at this point, it's like, okay, then this is another high here.
Right.
So then at this point, you're looking to see if they're going to break this. If it breaks this, if they were in balance up here, if they break this, they'd be filling that, but you would wait for this low here.
Right. Yeah,
So
you
then
got
we
it.
Go back down to here.
Mm-hmm.
So let's see if it does that.
Yeah, that's the structural low that I would use as well to basically see break before I go bearish.
See that? It's kind of going down. It's kind of going down a little bit there.
Mm-hmm.
Which
Then
that
the
would have been a
highs.
good sell right there too.
Yeah. But then the highs get targeted because it's still bullish from that
Right.
low that you circled to that high. So
Right.
that was a bullish market entirely, and it did come down 50% from that
Right.
low to that high.
So let me circle this. So then I would be looking at this. Even though it did go up, but didn't really buy up, but still. Now I probably would for the sell. Now I'm looking at this. No. I might be looking at this one. Seeing if
Yeah, that low there I would use as well.
yeah,
That's the point that broke the high.
Mm-hmm. That's the
Yeah.
low that broke the high. Exactly. So that
Yeah.
for me would be
Right.
if we break that low, then we're looking bearish.
right. So wait a minute, this one?
The one you probably circled because that one's already mitigated. It already
Right,
pushed
right,
up and came back into it. So that one, yeah, for
Yeah.
me, that's what I would use.
Yeah. So let's see what they do with this. I'm just playing around with it a little bit and then yeah, I wouldn't be selling yet.
Mm-hmm. It's still bullish. At any point, it's probably going to run that high unless we just break that low here.
Yeah, that's what I'm thinking. I think it's gonna run that high. Hold on for a minute. Let me move this out the way. Let's take this out.
It's pretty much in that most extreme zone that you can buy it at if you have the confirmation right there and try to run it to that high from here on out. But
I need to screen a lot closer, but I can't. Let's hold this indicator. Now let's see if I can try to make it. You know what? I'm gonna do this without the indicator for a minute. So we know where they are. So now what we're looking at is if it breaks this.
at times like this, it's hard because like you want to think it's going to sell, and there it goes. Yeah.
And it broke. Yep. So
Yeah.
this is interesting. Yep. It went down. And so now I'm going to use this, breaks that.
Mm-hmm.
And so
And you're
now,
bullish.
so now what I'm thinking is, let me turn on my indicator here. And so now what I'm thinking, okay, what did I just circle? I thought I just circled it up here. So up here, So then we would be looking for this to really to turn we're bullish at that point. So then, yeah, they're going to continue to go down. Yep.
Probably going to hit that bottom zone because it's probably just one higher time frame bearish move, and it had bullish moves inside of it, but on the higher it was it's ready to go down.
Yep.
That's where you can
Because-
catch a lot of pips.
Oh yeah, because they haven't filled all of this yet. They only got to this point previously, right? They medicated half of that, but then they've been continuing to go up to here.
Mm-hmm.
So it makes sense that it broke and went all the way down to here. And then they're probably gonna bring it down to that zone, like you said, but they still got this.
Right. Every low at this point previously is liquidity that they're grabbing. Basically, all of those lows that already were created on the left are just getting taken.
Yep. Yep. Down to that zone, just about. Yep. Yep.
Mhm.
Yep. Yep. Yep.
Yeah.
Yep.
Because bro, like if you switch to like maybe 4 hour real quick, it might show you that it was actually one big move on the 4 hour. Yeah. You see that lower high? If I can annotate real quick.
Go ahead.
This is how it's fractal. Everything is in the market is like, it's smaller moves happening inside of bigger moves, but this, am I able to, all right, 1 second. Okay. Let me
Yeah, I gave you
annotate.
control of the remote.
Okay. So I can get your screen. Okay, cool. Come on. Work with me here. All right. So this higher time frame was basically telling you this whole time that you had a lower low here, a lower high here, and a lower low here. So the range at this point was this high to this low. And what happened is we were bullish on that 15-minute, getting buys, and they're all up into the extreme, which is this last bullish candle over here, this supply zone that held and shifted. And basically the target is all of those 15-minute lows on the left, and ultimately that low at the bottom there as a target. So it may hit this low, but it's already pretty much done all the pushing down. This is a bearish market on the 4 hours. So basically it's expected to continue to do something like that, which is exactly what you have right here.
Yep.
Boom. So that low is a target. I just wanted to share that real quick because it's a macro move, and your 15-minute is like your micro moves happening inside of the macro move.
There we go. This is some good stuff. All right, so yeah. Anything else? I mean, Alex, you can keep on going because I know you learned a lot as well. Anything else you want to show us or? I'll pause this recording until we continue.
Okay. All right. So kind of just to piggyback off of what I was saying about how there's moves that are created inside of each other, like impulses basically. And you have structural lows that are protected when a shift occurs, which you can see here. Basically, if we follow this down from this point up here, this is a 5-minute chart, by the way, but ranges and impulses, they happen on any time frame. So it really just depends on like what you prefer and what you like to, get yourself involved in, based on higher time frame taking longer to develop and smaller time frames being a lot faster. But this 5-minute here created this high here, which previously it had this higher high, higher low formation, which broke there, took out the previous higher low. created a new low. If we measure that impulse right there from this high to this low, let's just see if it did a 50% pullback at all, the fib. So not really, it didn't hit 50, but there was a lot of imbalance in here in this candle. So it filled the imbalance of this candle here, continued lower, and created another lower high to lower low range, where at this point, this is the range that we have to work with. So in my mind, I probably would have used this this last push up here with the imbalance that pushed price down and took out this previous low. I would have used that zone for a potential selling area, but it got plowed right through. Like there was no hesitation. This thing just just wanted to shift and basically break these highs here and create new highs. So with that shift occurring, I was saying to myself, this was all front tested. Like I didn't trade this market. I think this was yesterday around like 8 p.m. or something. It was yesterday night. And I was just watching this. I set this up and I said, okay, I like this wick because this wick, inside of that wick is basically on a 1 minute chart, perhaps a last down move before that structural high got taken out, which it is. It's basically these two black candles here before that huge impulse to the upside with a lot of imbalance. So I figured I'd look at that zone. And when price came back to that zone, my confirmation was, it's pretty simple. I just like to look at two candles that break together, because what that really is like a fractal structure break on a time frame that's a lot lower than you can possibly see. It's like seconds time frame structure. So this candle here, that's one candle. This candle here, that's two candles. So basically I just put like a box over it once it hits the zone from the high of that wick to the low of the second candle. And that's confirmation number one. I try to wait for two of them to happen. So basically on this one here where it gets taken out, you can see it activates basically number one right here where those wicks pop through. It comes back in, and one of my entry confirmations is to just either wait for that second one to occur or wait for the pullback into it and buy stop. In this case, the lowest candle's high. So when the lowest candle's high breaks, I basically get in, which is basically this bearish candle right here. Let me get rid of the blue box. This bearish candle right there. The high of it breaks, and I'm in the trade with like a buy stop setup or just a really fast market execution with the stop loss right below that area, below that wick. So that's double confirmation for me. I'm in, and again, I take this, but I basically set this up as if I was to take it, what would have happened? How would this have played out? And so it did run pretty decently too. It did like 4 risk to reward, 4 to 1. But the target, as you know, like kind of like how I was explaining before, I always like to think of the range high or low, depending on whether it's a bullish break or a bearish break, as the target. So my main target is basically the high up here. It's basically the high of that wick. And so what happens is price comes back. There was a second entry here. You can zoom into that. It was the same thing, basically a 2 candle breaks there. And the second 2 candles breaks there. So that was the second entry right above that, which also ran a little bit, but it came back. So as soon as it comes back into the zone, considering that 5 minute is still bullish, still pretty much within the bullish range. Basically all of this is the range. The zone is not invalid because yes, it wicked here, but again, it's more of a liquidity grab. It's not telling me that my zone's invalid. So if it comes back to my zone and I get the entry again, I just go for it. So I go back to that 1 minute. And I prefer to like break it down. I don't have to be on the 1 minute. I can do this on the 5 minute, but just to get like a smaller stop loss and a better risk to reward, I try to break it down a little bit lower. What I see here is the structure is coming from this high. Okay, nice big range down, creates the low within these wicks, creates a lower high right here, and then creates a lower low with these wicks. Those wicks took out these wicks here. So as soon as this structural high breaks for me, that's a good confirmation that it's shifting from my zone and my zone's going to hold. So it ends up doing that, basically creates all of this range here. And I had this area here. Why this area? Because again, a lot of imbalance before the break happened, knowing it's probably going to come back to that zone or within the 50% of the range. So again, I use the fib. 50% is this red line. So it basically hits 50% and lower, which is good. And my confirmation here, 2 candles. So 2 candles there, it breaks right here. And the lowest candle that comes in is this bearish one. So I buy stop the high, or I just do the second break like that. That one runs, but then if I have my stop loss set here, this takes it out. So that might be a small loss there, but then I do it again. So second candles or 2 candles break, confirmation 1. This candle breaks that candle's high. So then the second candle's wick is the low. And then once that breaks, that's my entry. It may seem a little crazy, but it's all fractal based structure. Once you kind of get it, it's really crazy understanding. Like if I was to show you what this looks like on maybe a 5-second chart, it all makes sense, but it's as low as you can possibly go. So with the stop loss below that, still anticipating that the high is that 5-minute high right there, it played out. And I didn't even watch it. I just ended up seeing that, oh, wow, that played out, and it ran. And that probably took what, back on the 5-minute, let's see how long that would have been. From the entry here last night around 11 p.m., 11:05 p.m. to 10 hours later, basically overnight trade. 1 to 19 pretty much risk to reward. So that's crazy, but that's the potential that, learning structure and smart money has to do. Obviously that's a lot, but basically what I have now on it is that it's bearish. It's pretty much been bearish looking at the higher time frame. So like 30-minute, I have this circle here and this circle here as basically a lower high and a lower low. And so all of this imbalance here got filled, came right up into it. And this last little bullish candle up here was the area to look for the confirmation, because the range is bearish. It's basically broke this previous low right here, and it's moving like bearish like this. So the anticipation is that it comes up into whatever zone and continues lower, because the low is a target. Each time we make lower lows, lower highs, the low is always a liquidity target. Same thing on the bullish side. The high is always the target. So the idea is if you can get in and catch the move to wherever the target is based on the structure, then that's like basically where you want to aim for. But currently the range it's all internal, meaning all this structure here, all this that you see, it's internal structure. Really all that matters again is just the most recent high, which could be this down to this. But the higher time frame for me was this, because if I go to 4 hour, it looks a little different. It looks more like a liquidity grab on the 4 hour, but reason I'm still bearish on it is because zooming out again, you have these lower highs or lower lows, these lower highs, and this lower low. So it's still bearish on a higher time frame to probably come back to 25 grand. And if I go to weekly, this is why like time frames they work with each other, and the higher you go, the longer term it is, you can see that it's pretty much bearish, man, all the way into potentially 20 grand. And I'm hoping 10 grand because I want to buy it there. And why 10 grand? Because 1 month, we go really high now, 1 month time frame. What do we see? Previous higher high, higher low. Okay, higher high. Now everybody thought that this was like that we were going to basically come up from this range or this zone rather and just keep going, but you can see that it only broke with wicks over here. So smart money in this market on Bitcoin basically like fooled everybody and liquidity grabbed the high on the monthly time frame with these wicks that just shot up. And now they're really confusing people thinking it's crashing, but really it's just correcting because all this is imbalance on the left. All of this is still a bullish range. And so what was the last, unmitigated zone before that broke, before that range was created? For me, it's 20K. There's a nice little wick there. And then it's that last little push down right in here on the monthly around 10K. So, and if we're looking at weekly, if it does get bullish, well, the range is bearish from this high to this low. And why is that? Previous high was here. Just kind of following it from this old data over here. The lows were here when it first crashed last year. And then right here, notice how there was a push up. And then there was a lower high here, or higher low. Then a higher high. And that broke right here. So the new range was this, basically. The weekly range, at least, was that. And there was a zone right in here. Last up move before that break that mitigated right here and created a new leg down. So pretty much long term, it's bearish ever since that break right there. And now currently this break right here from this lower high to that, or lower low to that lower high. So if it runs bullish, I guess it would from here probably just run into these zones probably, or at least 50% of the impulse somewhere up here within the imbalance to then go lower. But again, that's long time frame stuff. Yeah, that's really all I was looking at over the weekend. If any of you guys have anything to share or have questions, please feel free. Like, don't be shy. I think
Yeah, this is some good info. What do you guys think so far?
Yeah, that's pretty good.
That's really interesting about what you said about it going down to 10,000. And you can see, it finding the balance. It's in balance, has to go all the way down there.
Yeah, all this.
Yeah. And I just wonder, it's going to be panicking in the streets if it goes down to 10,000.
Yeah, exactly. And it happens all the time. Like just for fun, we could even look at like before we were really looking at Bitcoin back over here. This was what, 2018. Yeah, the whole year of 27, ending 2017 with that huge impulse where everybody was like, buy Bitcoin. Okay, it's 20 grand. Wow, everybody bought up here. And then it did what it's supposed to do pretty much. Why? Because lower or higher low or higher high, sorry, higher low. Okay, higher high. So what happens? We come back to the demand zone down here. It buys up. And it basically does a quick shift here to tell you, all right, we broke previous structure somewhere over here. So when it comes back in, you better be ready to buy. And that's exactly what happens. It comes into this extreme area here and just takes off from 4,000. And so that's basically what we're seeing now happen. Like it's just coming back to that monthly demand area, which is it's scary to think about, but it is down in that 10K area. So It doesn't have to get that low. I just have these zones here just in case. It could just be filling this imbalance like it is now, this
Right.
monthly imbalance, and it might just be ready to shift and then start invalidating this zone and this zone, and then, you know, break the highs and go higher.
Right.
But there's always going to be a chance to pretty much, I guess, get wealthy off of crypto, because even if this happened and you didn't catch it, maybe months to a couple of years, it's going to correct itself again. And then you can just buy whatever range was created or zone was created from that range and take it higher. So, yeah. Get rid of all of this mess.
Hey, that's pretty awesome, Alex. What's going on, everybody? How y'all doing?
I'll be right back.
Hey, good, Chris. Thank you.
Good. Hey, I just want to ask you this real quick, Alex.
Mhm.
And I may have asked you before, I'm sure I have, but with the smart money concept, how much education have you put towards learning, you know, how to actually trade that way?
Yeah.
And is it just, it's beyond the YouTube videos, it's actually finding the mentor
Yeah.
and things of that nature? How's that looking? It
All
looks
right.
good on our end.
Yeah. I mean, the hardest thing is, yeah, you can learn like I guess the better way, if you want to call it that, to trade, like the smarter way, since it's called smart money. But I still struggle to this day with like psychology and just FOMO. And even though I can show you guys this stuff all the time, like how it works and how ranges get mitigated, it's more like trading is not so much, I guess, about the strategy that you're using, because whatever you guys do works really well, I see. But like the psychology and just not FOMOing into stuff, that's always a struggle. So like as far as the material goes and the mentorship, when I was kind of explaining on Bitcoin how I enter the market with those like two candles that I look to see break on a fractal, you know, 1 minute with that green box and whatnot, that's stuff you learn in the mentorship. And then just really kind of learning how to get these zones identified without any indicators or anything else really besides a raw chart. That's all mentorship based. And it's a lot of material. I'd say at this point, it's been maybe eight to 9 months of doing smart money. So not very long, but some people catch on to it really fast and they get the hang of it. Others take a lot of years, and I'd say it's going pretty decent for me. I'm not where I want to be, but I'm doing pretty well with it, and I'm not going to give up on it, because it's crazy to see like how it works in just about any market. Like Ethereum, okay, same thing, like higher low, or higher low, higher high. The higher low gets taken out, the supply zone gets mitigated, and we go down and target the lows. Like that's the smart money way. But you just kind of get better with it as you keep at it and don't give up, and really try to simplify the way that you trade with it. Because that's really hard for me too. Like for the longest time, I just wanted to use a lot of indicators and learn like what I can do to kind of cheat my way through it, I guess. But it's the simpler, the better, I guess. And yeah, it's going pretty good though. If that answers your question, bro. I'm sorry if it doesn't.
No, yeah, I appreciate it. Does. Thank you. Thank you.
Yeah.
It's like really encouraging when we see that you're grasping this and really demonstrating it to us.
Yeah.
And you give us like little, like screenshots and things of that nature, just providing evidence that, hey, this concept, it's working for you. And so I just appreciate how you do that.
Yeah. No problem, man. Anytime. Yeah, like you see it clearly. It doesn't, obviously it's not like the golden strategy or anything like that. If anything, it's a lot like Jay Wayne's method of trading when he uses fibs, right? And he finds an impulse, a structural move, like this one, for instance, on US 30, this weekly time frame. He'll do something like this, right? Where I don't have the golden zone up, but you can see from measuring this high to this low as a range, it's already in the golden zone. It's already at 50%, and the 61.8 would probably be somewhere here. And my zone, I'm usually trying to find it somewhere at that golden area or a little bit higher sometimes for the extreme. So like somewhere up in here, that would be like my last resort zone to look for cells, to keep taking it down like that. But just as a clear example, it was like that over here. Let's get rid of all this. Okay, previous higher low to higher high breaks. On this time frame, it looks like a liquidity grab. If I go to a daily, it still looks like a liquidity grab. And if I go to maybe a 4 hour, it's a body break. So in this moment, yeah, it is like the first shift down. Some people might not have wanted to sell it, but again, just looking at that weekly and measuring out the range that was created from this break, this low, basically this high created this low, and that's the range. So the fib goes on, and I'm not really looking to sell it until it gets in that golden range area, which is at least 50% of the impulse. So you can see how it mitigates that, fills the imbalance here. And ultimately it mitigates the last up candle, which is this one right here. I know it's bearish, but on a lower time frame, that's a last bullish push, like back to the 4 hour. You can see all of that. That was just basically a lower low, a lower high. So this all bullish push right here, and then the big move down. So yeah, it's, and then this one here, this next impulse. There's another one right there that played out just like that.
Do you pay any attention to like double tops and double bottoms or tweezers or anything like that?
Only attention I give those is that they might get ran as liquidity, because
Yeah.
it's a very retail based way of trading, and it happens a lot where they do end up getting grabbed at some point. I'll try to find an example, but I don't really like.
If you go to the daily right there,
Uh-huh.
at the very end, there's going to be a W.
Oh, daily. Okay,
Yeah.
so
Yeah. See
okay,
that?
so this here.
Or double bottom, or whatever you want to call it.
Yeah, so you're seeing this, right?
Uh-huh.
Okay, got you. So if I was to only see the market as this before it formed, basically,
Uh-huh.
I'd be bearish from this zone right here.
Okay.
And that was basically my idea on the market, like when it was like this too, because the only thing that matters with smart money is like the range that you're in. So the lower low is there, the lower high is here, and the lower low is somewhere here. So I think if it had come up into here and given me confirmations, I would have looked to take it down and clear that low. But yes, it is a W after it finally finished and, you know, broke the neckline here, right here. So it might be a good, at this point, range for me to be bullish on from this low that caused whatever high is here. The high is still being formed, so we don't really know if it's gonna, at least on the daily, give us, you know, another buy perhaps from this last bullish move here,
Right.
before imbalance was created right here.
Yeah.
But if it does get bearish, I'd definitely be looking at this now for a buy, because for me, it shifted bullish. It's not bearish anymore.
Exactly. I was surprised that when it broke the neckline, like you said. You know?
Right. Yeah. Yeah. Because I mean, like economically too, it's all like, it's supposed to be falling, you know, interest rates are being pushed up and the stocks are just going down, and crypto's going down too. But like this, it's kind of like a little curveball, and that's kind of been happening a lot this year. So what I'm thinking right now is that on the daily, it is bullish again from that break. If it gets down into here, I'll look for confirmations, maybe like a 1 hour or 30-minute double break to the upside, and then probably look to get involved on that double break to take it higher and clear whatever high is created. And then really just zooming out a little bit further, it is still bearish. It is bullish internally
Yeah.
on the weekly, because if we look at the weekly, it's bearish.
Uh-huh.
It's bearish from this high right here, from that wick right there. It's just basically been falling this the structure range like this. Like if I just put boxes on it and make them red, broke the box right here with this wick, came back into the box, at least 50% of the box, created a new box right here. This is something that's taught in the mentorship as well. It's called MBs. So it creates a new low, comes back into the box, at least 50%. And then what happens? Creates a new box right here. Basically from the low to whatever high before the box breaks. That would create the box. And then now this is our current weekly range that we're in. So we get to 50% of the box here. And yeah, I'm still bearish on it, given that there's a nice extreme wick here.
Yeah.
And on maybe a 4 hour, that looks really good. Like that's, see that there, that's all just a big bullish push right up in there. All these candles stacked here before major bearishness came in. And then what do I see here? Triple top. So that in my mind is like, I see that as liquidity. Like it's not going to hold. It's going to get grabbed on the way up. Most likely, at least for me. Like that's where we could potentially be in buys at this daily zone here.
Uh-huh.
And then look to target those highs there too. And then hit that zone potentially. I really hope this plays out because I have a blast explaining it to you guys, but this is going to take a couple of weeks to play out and then fall off and hit that weekly low like that. So like I was showing Paul on that 15-minute on NAS, that 15-minute was the micro structure happening, but that 4 hour was the story. It was giving you the reason why it was bullish going into bearish at that specific zone that whole time. So same thing here, that weekly is that story for me on US 30, and this 4 hour and daily is like that inside structure where I can buy into the sell area, if that makes sense. Because there's a reason to buy now. So
yeah, and I was noticing on my charts, I know you guys aren't so much into formations, but there's this teacup that I keep seeing. You see a teacup and then it drops, another teacup and then it drops, and then yeah, like this, right? This here. Exactly. There's a few up. You can see them.
Yeah. I mean, it's just to keep it as simple as possible. With smart money, it's just the only thing again that really matters is that range that we're currently in. Like if I go back to 4 hour and I zoom in here, these lows get taken out. So that's like a bigger time frame structural higher low to a higher high here. That gets broken right here. Okay, so it makes a pullback, fills some imbalances here. At this point, if I just kind of hit the replay tool here and I get rid of everything just for a second. Again, just to kind of draw that in, this range is the only thing that matters right now, is the high to that low. So what zone am I looking to buy? Well, with the way that I'm trading now, I try to like use fibs when there's a lot of imbalance, and I look for the sell potentially when it gets to 50% at least. So somewhere here, but normally I would have a zone up here, like that last.
That's a breaker.
I was gonna say that's nice. That's a nice simple way to look at it.
Yeah, like fibs, basically impulse.
Yeah.
Fibs. Okay. And then when you get to fibs, I want to see at least 50%. As long as it's like an impulse that has a lot of imbalance, like this.
Yeah.
So let's see if it hits that 50%. I don't think it does on this one, but the next one is a good example. So yeah, it doesn't hit 50% because why? We broke the low and we put in to play new structure from this high to wherever the low is going to be created. So let's see. Okay, so the low's created at this point, safe to say, because it's pulling back. The low's created here. And now this fib gets canceled. It gets erased because that's not the range we're in now. This is just like the smart money way of thinking, the way we're taught. Like that range is irrelevant because it's not the current structure on this 4 hour.
Draw the new fib so I just want to see.
So on this range here, there's the new fib.
All right.
And the levels I use I keep it as simple as I can. When there's a lot of imbalance, there's significant imbalance here. So 50% to about 78.6 is usually like where I'll start looking for confirmations on a lower time frame. So maybe for me, the rule of 30 on a 4 hour chart means an 8 minute for confirmation. So will it let me go back to 8 minutes? Yes. Okay, perfect. So there's that higher time frame impulse. And let's see what it does in that fib zone. So basically what in my mind, like now the 8 hour structure, I need to see that go bearish for me to get into the sell. So right now we're bullish from this low to these highs, potentially, unless we count this, then there's probably a break there, but I would look to sell off of that zone, but let's see. Okay, and that actually played out. You see that? Oh, I didn't know that was going to work, but that literally just worked. Like that's crazy. And again, I'll just kind of slow that down. That's insane. It literally tapped 50%.
Yeah.
I'll zoom in. Right there with that wick, right there.
Right.
And zooming in with this structure again, the higher low was here, the higher high was here, and then that higher high got taken out by these candles here. So now the higher low was here and the higher high was here. And where was the break of structure on the 8 minute? Right here. So since it broke here, I wanted to use the last unmitigated candle, which was this bullish one here, just like that, to see the sell. And that's where it came back into. So having that highlighted and just setting an alert, I'd probably just look to get in that on a lower time frame even. But yeah, but you can see like without having to get complicated with it, it's
I like that.
Yeah.
Like I was saying before, I like the blocks because those blocks are helping me like with that other indicator. But I like how that looks with the Fibonacci too. That looks good.
Right. Yeah. And it was like really weird here as well because it did hit the low. It did target the low right there. Yeah. But on the 4 hour, it only wicked it. So to me, that was like, if I was looking at it, I would be like, all right, well, that's not a new range. That's not a new break. So if we go higher, what would I use on this 4 hour time frame? The last move up that's unmitigated before the down move, and look at that wick.
Yeah.
And then boom, it targets the low.
Wow.
Right there. So yeah, just seeing this happen over and over and over again just really helps you to start to grasp like there is this way to kind of get used to learning the market and seeing it a little different than we're used to. And you get better with it over time. Like I said, I'm not where I want to be, but I'm still progressing, and I just got to take it as slowly as I can so that I'm grasping everything correctly. But this is basically like what's inside of my head when I look at a market every time. It's just this on repeat, whatever range we're in and whatever zone is created, like this one here, high to whatever low. Okay, so the low is created. All right, and if the high was broken with a body, then I'm invalid. So technically that did break with a body, but it also did run the low, or at least it's potentially, yeah, so it did run the low. And that's, that happens. We're not always right, but it did hold, and it did come as far up as the very top of this range from this high to this low before it did sell off. So this is like a common indice type of liquidity grab that I see happen a lot. Like it tries to disrespect smart money sometimes,
Right.
And so most of the time I'll be like on EU or something, because when that happens, I just get really frustrated and it's annoying. It's just like, man, I don't like getting screwed by these indices over and over again. And they don't respect the rules of smart money, but it works in any market. It does work in any market. It's just some markets better than others.
Right.
But yeah, that's pretty much all I got. I'm gonna probably head off here in a minute, but yeah, if you guys have any other questions, feel free to let me know. Or yeah.
That was a good review. Very good review.
It was a
Thank
very
you.
good review. I'll go ahead and stop the recording.
Okay, cool. And let me end my screen here.